Don't worry about the stream loading. It should have to just click off of it and re-click on. Should be good now. Oh, okay. Oh, okay. You couldn't hear the alt. Okay, no worries. I'll briefly just go through what I was saying. I didn't say anything, but my AMD driver just crashed, so I had to restart my computer. Anyways, still looking for previous weekly high as the target up here. Your ranges today are pretty small. You know, from where we just opened up to here, it's only 20 points, and from here to the swing high, it's only 120-ish points. So it's quite small ranges. Do I think previous weekly high is going to be the main target? Probably not. I think it's expected to go past that and probably continue to just jam up into all-time highs. But that was my bias yesterday. It's my bias today. We're going to try and do a demo trade as well. I'm debating on whether or not to get this up to 100,000 or if we just reset it and go back up to 50. I don't know. I think we'll keep it for now, and then if it gets boring, we'll reset it. But bias is still bullish, like I said. Get it to a milli. Or maybe we could. Well, we'll get it to 200,000 and then reset it. Looking for a macro trade if it gives it to me. Still trying to be patient for the week. I was looking at trading Asia last night for a run down into this swing low here for a Wednesday low of week. It never really gave me the setup I wanted coming into the session, so nothing really good in there. Did take out the Asian low, expand back up. So to me, this looks like a kind of Asian range measurement. That puts you up to -4, -4.5 up there. And then on the last manipulation leg here as well. Nice fib projection target there. And we're obviously closing through the -2, -2.5 for the session. So that remains the target for the rest of the session here. Obviously, the 5-minute is in line. 1 minute, we're just looking for a retrace back inside. Let me increase this. There was no stream yesterday. Obviously, price action. Oh, I gotta upload the stream from yesterday and a one-on-one call. So that'll be done right after this stream. But there was no mark review, is what I was talking about. No mark review, so it was just, I mean, you know, what is there to really review? I mean, we can go through the same exact stuff we went through on Monday's price action, but I felt it was quite redundant to do so. This is kind of seek and destroy conditions, if you will. You know, back and forth, constantly sweeping buy side, sell side, and it's almost impossible, if not extremely difficult to get any sort of good move. You know, it's going to be a scalping kind of range, and every single time it looks like it's going to go for a liquidity pool, it fails to. That's the part that makes it very difficult to do, because you'll get stopped out if you're not taking partials. So this kind of price action, I look at this same thing I look at Monday, skip it and avoid it almost under all circumstances. And then if you're struggling to identify these kind of conditions beforehand, watch the mark review that we posted from Monday. That is in the models and reviews section, only for you guys. I haven't put that publicly, and I won't put that one publicly. So same kind of review for Tuesday. I will explain. Tywags asked about how to kind of read fair value gaps and how to read when is something balanced, when is something imbalanced, when is it going to get a reaction, when is it going to fill all the way, things like that. How to read fair value gaps. So I'll either make a dedicated video for that, or we'll do some of it in here, probably both. We'll do a little bit of tape reading the fair value gaps off this live, and then we'll go back in and kind of, I'll show you there. Last Thursday's price action had some really good fair value gaps we could look at, but it's hard to do so, you know, with bad PA, right? Like you look at yesterday's PI, I can't really go through and say, I mean, you could, but I can't really go and say, oh, look at all these gaps being properly respected when you see this and then this. You're like, okay, yeah, it's great, right? Anyways, so this large expansion up. I was already kind of looking for this, but I was favoring classic expansion week. I wanted Wednesday to make the low of the week, but either way, you could blindly buy, I guess, FOMC if you wanted to in demo. That's my expectation, and we're going to continue up until Friday. Anyways, a lot of low resistance liquidity that we talked about having over on this side, right? I can take off this and you see all that. We talked about it yesterday. We talked about it on Monday of all this low resistance generating. And that's where you're going to have this quick energetic run on all those stops, right? How many actual speed bumps do you have in price? Maybe you have like one here, right? You can go through and you'll see on the 1 minute chart kind of slowing down and working slightly in there. And then on the 15-minute chart, you don't really have much, if anything, really above all of this, right? You look to the left. Okay, you go to here, then you go transfer over to here. Got this little gap. Okay, that's not really super inefficient. Then you work up. Okay, here, all these wicks, this gap maybe. So it's all very low resistance, and low resistance buy side is generated by this high resistance move, right? All this chop, 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 chop. Then it waits for time. Why is today moving flux? Today is the first red folder news driver for the week. So you'll see expansion today and probably expansion tomorrow with the 8:30 news. So that's why you have this quick energetic run. And that being said, you're not going to have, if there's not a lot of premium arrays in the form of inefficiencies or in the form of, swing highs, you're not going to get discount retracements. It's just going to want to quickly, energetically just run up to the high. And this is where audio gone. It's good now. You're going to have to click off of my logo and then click back onto my stream, anyone who's in here. So click off the logo and then click back onto the stream. What I was saying is, if you don't have any premium arrays in the form of buy stops like time-based liquidity pools or inefficiencies, you're not going to have a lot of discount retracements, right? It's not going to go boom, 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 where it just continuously gives you entries along the way up. A lot of times you're going to have order block entries or something like this, where it's just going to slow grind up into here. And if you know that, and you know, okay, algorithmically, that's normally how it works, you're not going to have like FOMO trades. I don't want you to look at this and it's going too quickly. It's going to, and you look at it in terms of points, it's moved 70 points. Or, you're freaking out because there's no fair value gap entry and it's going to hit this, right? This is a draw. A draw. Meaning it is a singular draw on liquidity. It is not the draw, right? This is not exactly where it's going to go to and reverse in a best case scenario, right? It's going to continue to go up. Like I said, I want to see continued expansion on Thursday, Friday. And even if it was, you don't know all the time this is the exact level, or I don't know all the time, this is the exact level the market's going to reverse on. Yep, I'm talking. Is my audio good still? I know Discord's been weird. I've been cutting out. Okay. So making a decision on the fact that, we're so close to where I think the market's going to go to, not looking at time, not looking at the strength of the market, not looking at a bunch of other things, and you make an irrational decision off of that, is not a good idea. Neither is, it's so close to this draw, let me just buy it here and scalp it to this buy side. Sometimes it's going to work. And that's when everything else is lining up. But the problem is, if every single time you're waiting for it to go to here and then you want to buy it, it's just not a good, obviously it's not reinforcing any good habits, not a good entry model. And then you have no kind of confidence in your own trading ability. All right. So you can go back over here and you can look at, you don't see any swing points in the hourly chart. You could see in here still no swing points, right? So you can see if you wanted to kind of, this is a tool that you can use if you wanted to, but you'll see how we react to that wick, right? If you have a large wick, kind of rejection block, you can just see how we react to around 50%. This is pretty close, so it's not really going to be super useful here, but this is also a premium array, right? That rejection block, the wick up into the swing high. So it should easily climb and close above that. So I'm not worried about, oh, it's going to reject off of here, but sometimes you can see it either tag the lower quadrant or the middle quadrant, and you can get a little tiny retracement back down and then move back up. But if obviously if one candle closes above 50%, that tells you all you need to know. And using gaps, using order blocks for like mean threshold and consequent encroachment for closure is a very good, useful tape reading tool, right? Or if you're looking at order flow and okay, it's closing past 50%, it's closing past either 50% of an order block or a fair value gap. With everything else, with your bias and narrative of the higher time frame, that can tell you a lot about the strength of the market, right? Okay, it's unwilling to do it here, it's willing to do it here, and you're measuring both sides of kind of how is it closing. It's just one of those tools you want to use in tape reading if you're keen enough to see it. But anyways, I'm just going to make this a little bit lighter so it's not impeding. There we go. You can see the nice SMT here at 9:30. And then the 15-minute chart. What is this with? Tuesday's daily low. So previous daily low there. SMT at that low. So you can see the little reaction you're getting from the wick. It's a premium rate, and you got nice inefficiency here. This would be your first presentation gap, unless I'm missing something. I got one here actually. All right, yeah. And then you got inefficiency right there. Here's your macro time. If you can give me a discount, I'm tempted to get in. We got an inversion gap over here in this the 5-minute. Extend that out if you can form a bullish order. Yeah, bullish order block within this range. It may want to leave it quickly. And if it does, you know, if you were to look at this in back testing, if it were to just offer this during the macro, it's not even in macro time, so don't even worry about it. But I'm looking at, okay, this fair value gap being traded into, and if it was to trade into this and give me the buy side, that's something I would look at and be like, okay, how many times does it actually offer me the premium gap out of a dealing range without an order block? Very rare. So when I look at this, in my own hindsight, and back testing and things like that, that's something I would say, okay, that's not something I want to be worried about or studying, because the chance of that happening is very rare. And I don't want to be tweaking my model to accommodate for something like this. Because if then I'm buying on every single time there's a premium gap when I'm trying to go long and I'm buying off that, I'm going to get 9 times out of 10, I'm going to get a worse entry than if I had just waited for discount. Right. So normally the only times you're going to see the premium gap being used there is if you have a bullish order block to the left, either in the form of a breaker, a mitigation, or a regular order block. So that's something I would just look at and be like, okay, I'm not going to worry about that. And that's the benefit of when you go back in, studying to see how the market's printing and being honest with yourself. Is that something I can use? Is this something that I'm going to be able to see over and over and over again? Or is there something better that I can wait for or potentially see prior to that entry? Right. So by the way, then for this flux, why are you taking it from this low to this high? There's not really any intermediate term low prior to that. I mean, you can maybe look at the 2-minute, but yeah, there's nothing there. So the most relevant dealing range prior to this fair value gap printing would be this swing low to this swing high, right? You maybe could drop it down to this if you wanted to, but that would be your child dealing range. So for it to drop back into this inefficiency, and like I said, I'd favor if it drops into the inversion array and forms an order block in it, and then trades off, touches the order block, and so basically something like this. I want to get that entry right there so I can place my stop at the low. So let me screenshot this actually and put it in predictions chat. And see right there, look at, so this rejection block that we marked out, look at the closure past 50%, right? When it's coming up, it's spiking up and it's closing past 50%. That's telling you that it's likely to come back for there. It's not going to come up and close 50% and then leave. A lot of times it's showing you, okay, in the future, it's printing and closing and willing to go higher to the next premium array. All right, so as it's tagging to the premium array into 75%, preferably it's going to drop back down, offer discount into the inversion array, into the inefficiency in blue, obviously, and into discount. And if it, best case scenario, it's going to touch actually this order block. Now you got 3 PD arrays lining up, very high quality setup. But I want it to come back down, preferably with a black candle, print all the way through this IFVG with one entire black candle, then start to displace up. And if I can get immediate rebalance off of there, or even a 15-second fair value gap, I'll take that. And that way, I don't have to put my limit order here, and then place my stop all the way down there. I'd rather get a tighter entry where I can squeeze as much RR out of that setup that I can. I may miss a couple of points on the way up, but in that case, it's not a big deal if it goes from a 2R to a 6R. And I'm not trading. I don't want to be trading R's. I'm just using that as an example to visualize it. But I just want the best entry and stop loss ratio. So I don't want to be just buying it here, putting my stop all the way down here. And this, like I said, this is a draw. This is a draw. So just because it tags this, you have to look at the time of day. You have to look at the strength of price action. Look how quickly it wants to get up there. Do I think it's going to come all the way up here, tag this, and then come all the way back down and manipulate? That'd be pretty crazy weekly profile for it to come all manipulate, form a bunch of low resistance, come up, manipulate all of that, then come all the way back down. I'd be bearish for probably all of next week as well. Right? Got a tiny run on stops within the macro time here. You can see it's starting to hold these 15-second arrays as well. But I'm not going to use that. I want to wait until it drops into discount. If it doesn't give it to me, it is what it is. You can see ES is dropping a little bit. Same thing with YM. quite zoomed in here, but just don't forget the bigger range and how close these points are, 20 points. See, there's a 5-minute gap right in line with that 1-minute inefficiency. And you look at flux you've got a gap here, then a gap here, then a gap here, then a gap here, then a gap here. Which of them are going to be filled, right? How do I know that if I'm getting in on this gap, it's not going to come down into here? A lot of the times, to be completely honest, you won't, right? It just comes down to skill of seeing it enough and being like, okay, that's something I'm comfortable with and I can trust it's not going to fill these. You can also look at the fact that, are they balanced? Are they going to be used as breakaway gaps? And even on the 1-minute chart, how efficient is that delivery? You look at in here, how many gaps are actually printed within this range? And that's telling you something, right? It goes open, wick down. Then it forms that one gap. Then it comes prints, 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 prints. And it's not forming any gaps. It's very efficient within this range. Although the candles are printing up, notice how many wicks are coming back and forth within that range. That's telling you that most of this is actually efficient. Maybe not completely efficient, but it's maybe 50% efficient. So in here, this kind of gap here, would I expect it to be traded back into? Preferably not, right? Even this area in here, you would expect this to be used as a breakaway gap because of the fact that that upper quadrant up here is efficient delivery. So I had to come all the way back down into this gap. At that point, I'd be probably bearish on it. So it's not going to come, if it were to offer me all the way into this deep discount, I'd be flipping my buys to bearish at that point. But we're still within macro time here. It looks like it's about to give discount. I just want you to notice the closure here, and I can remove this to make it go a bit cleaner. Yes, right, correct. And sometimes if you're trading a discount, retracement entry, whatever, that right there is going to freak you out. Don't let it. Okay, if you're trading on a 1-minute, it just got super close to discount, and now it's going to start to leave. Don't just mark it in right there because it's starting to leave. Okay, if it were to do that and trade back up, number one, there's something to learn from that. Number two, it's not actually a retracement, or we had marked it out wrong. Right? The definition of a retracement in price action is to offer fair value. If there's no order block here, and discount is here within this child dealing range, fair value would preferably, the way I see it, would be within this blue box, and actually all the way down to this order block. This would be back to where it would be completely efficient. What the heck? So if it does this and it trades up and takes out that high, is it worth breaking the rules one time to get a little entry here? Boom, right there, right? Is that a true retracement? No, I look at this as no. It's not offering the requirements for retracement. It misses discount. If it misses discount, it tells you, number one, it's decently strong. Or as soon as it's tagging out this buy side, we want to see how it's going to react. And there could also be SMT there, right? You can kind of see it. Yeah, it's not that good. I mean, ES actually delivers the discount gap right there. Same thing with this dealing range here. Not a big deal. We can get a re-entry later, right? And even now here, now you have a dealing range here. You have an order block there. So maybe it gives you another entry. And like I said, this is a draw. It's a previous weekly high in the form of an ERL. It's not going to, if I'm bullish for the week, I don't want it to just tag this in reverse. And that doesn't mean that, oh, now you still got 10 minutes on the macro time. If your macro time is your entry and looking for a discount, like I said, now you have a re-entry opportunity or a continuation. But here's a good example where you look at this gap and you look at best case scenario, you actually can extend this out to the left, right? This gap down here, do you expect this to be filled? No. Why not? Because of the fact that we just had buying and selling worked right next to this, right? You could look at this up here and here and here and here, and then shoots up. Is that going to be inefficient? Most likely not. When you look at if this gap's about to print here in 10 seconds, you'll look at this gap. You can actually extend that kind of gap to the left instead of to the right. And you can see, okay, what section of this would be more inefficient than others? So boom, right there, extend it out to the left. Okay, well, you have this wick in here, that's inefficient. And then you got this right in here. So if you think about the orders, right? Orders being placed all within here. Comes up, fills all with buying, fills all them with selling, right? If it just did that, are there going to be a ton of orders in here? No, right? There's going to be more orders right in there where the wicks are. So this, if we were to look at this gap, extend it out to the left, I say, but would you like to see below consequent encroachment filled? In the best case scenario, no. You just want it to come back, touch almost this area here, this OB that makes it inefficient, and then trade back up. And that's kind of how you want to read fair value gaps. It's not going to be a perfect way to read them, but it's not going to be a one size fits all, because sometimes you have to go to multiple time frames to see if it's efficient or not. And that's where it sometimes can get tricky. But in this case, okay, I'm not going to pull it from this order block down here, right? You look at, okay, the order block is the last down closing candle before the energetic move up. That's correct. That's true. But it's not true in all scenarios, just like how a fair value gap isn't, oh, every single fair value gap is not going to be printed, right? In this case, I want to see how preferably this is going to be left, the bottom portion of this, just wicks, right? Just wicks should be contained within this area here. Wicks only preferred, because this is a balanced price range. Let's say wicks only. And even if I'm wrong, that tells me something. So in this case, okay, I'm putting out what I wanted to see and how it's supposed to be holding. We just saw the fact that it doesn't want to offer discount here and doesn't want to come back to this order block. So that's telling me strength. We can kind of gather from this 1 minute tape read, there's strength in the market at this point. So although it did just tag a EORL, that's important. So it's not probably going to have the same strength off that. You would expect some sort of discount retracement and even potentially sweeping into this sell stop. I'd be fine with that. But now we can say, okay, is there going to be strength on this portion too? Right? Is it wanting to just hold wicks within here? Does it want to quickly react out of this? And I favor if the candle buyers are printed above this order block. And if it wants to, like I said, if it wants to close through, then you look at, okay, there's the sell stop there, and you have discount on the stealing range, which would still be offering into this gap. Boom. So it comes all the way back down and closes within there. So now, if it was to fill this completely, it's being weaker than you'd like to see it for a perfect quickly tap this. And that would be like a mitigation with inefficiency. That would be like your silver bullet right in there, which we don't really have a last manipulation leg I'd feel comfortable pulling from. There's not really anything. So unfortunately, we can't use all of our tools today. Now you can look at the 15-second chart to see, is it willing to leave? Right, you got this here. That's one PD array. This would be two PD arrays. Look at the displacement as well. Gap, gap. Taking out that, and then the shift would be preferably a closure above here, but you don't need it to. Make sure all the other ones are strong. ES looks like it's going back up. YM as well. Yep, so see, okay, so that candle right there tells me it's not as strong as it wants to be. It's dropping back down into the range, filling it all the way, coming all the way back up, closing outside of it. This is the only inefficient section of that entire range. And it's printing past. So even there, it's showing you, okay, it's offering that perfect precision, but it's weaker than you would want it to be. So I'd have to see even more data just to see, okay, is it going to give me this discount in here? And I have to wait patiently, or I have to see some sort of another lower time frame SysD. So you could look at, okay, is this going to be souped down here in the order block? Or is it going to continue to place these candle buys within this gap? Let's see, it's no longer using this as a breakaway gap, right? A breakaway gap shouldn't be causing a lot of resistance on the way back down. Shorting all-time highs? Nah, I'm looking for longs. Although YM looks pretty good. Even ES doesn't look too bad. Would want more displacement. Okay, so now we just offer discount of that short-term dealing range as well as this dealing range here between this high and this low and this high. So on 15-second chart, I want to see if we're going to start to get displacement away. Now you've got, let me mark some of this out. Oops. SysD, does it want to start to hold this as a market maker buy model? So same exact thing. Gap, nice off the sibi there. So inversion prevailing up is one, confirmation of reversal. Two, now that it's tagged the SysD, does it want to start to hold bullish PD arrays now within this right leg? So gap there. You can just watch the reaction as well as the lower portion of this 1 minute inefficiency. Looking good. Candle body closing. And then there you go. Cross back down. So I'm being patient to wait for exactly what I want, and it's not giving it to me. It's still a little, I mean, that little wick there is not a big problem. You see the candle body still closing within that upper inefficiency, but we need to see upside displacement. So that right there, taking out that swing high, and obviously that shoot up there. It wants to come back down to immediate rebalance to the SysD. Buying a limit order there. There you go. Stop from me. We'll put out the intermediate term low. It's a demo trade, obviously. So I'll screenshot this, put it into predictions chat. So now you've got intermediate term low, the short-term low to the left of it, short-term low to the right of it. And on the 15-second chart, we're starting to see a little bit more strength out of this little retracement leg. So I'm more comfortable getting in there. On the 15-second chart, we're just using a sibi with a gap being traded back into. Now I could put it there. It's a little bit more aggressive. Given, I mean, if it's going to come back and touch this, it's going to go back and touch that. So I mean, I could probably trim it to this wick if I wanted to, like the rejection block. And if it continues to give me re-entry opportunities, I'll take those. Clear some of this mess out. So right in there, it's giving me order block. Let me put my executions on. You can see it a little better. Still no propulsion block has formed, so I'm waiting for that. Then we'll get the last little juicy entry. Let me put this down to 1. Staying in the upper portion of this inefficiency too, right? So I wanted to energetically run up for that high now. Beautiful. What about the 1 hour SMT with ES and YM? When do you consider that? Where, on the highs or lows? Or like on what days? Highs. You know, with where I think it should be going, I mean, it's obviously something to consider, but I look at that more as 6 sister, right? Which one is the stronger asset in terms of the 4-hour chart? If look at it like this, right? Which one is going to tag this high first? Most likely this one, the one that formed this SMT here, right? So this would be the stronger asset. So if it's tagging this high first, and if this one's lagging behind, you're always going to visually see that SMT here at these highs, if that makes sense. So it is something to consider, of course, but with where I think we're still strong enough to continue to push all-time highs, I'm not going to be looking at that as something to make or break my bias. It's something to consider, but I'm not going to spend too much time on it. I don't even like this here. Coming back into the range, touching the lower portion of this. To me, there's no point in it coming back down. And we haven't seen that secondary displacement. We got one right here, right? Inefficiencies forming, touching them, starting to leave, getting off of the sibi. And then right here, what I thought was going to be an immediate rebalance. Didn't really give it to me. I want that. If I'm trading an immediate rebalance, there's got to be an energetic reaction immediately after. Doesn't happen there. So we're stalling out within this gap. On a 1-minute chart, we can go back to a 1-minute chart since it's kind of cluttered now. You can see even in here, it's not that perfect reaction you want to see. Obviously, we have time of day. 10:30. And then once you see this high, this high is formed at 10:02. So in theory, the formation of this high past 10 o'clock should tell us what we need to see for the rest of the session. That doesn't mean we're not going to get a retracement and potentially get stopped out before then. But this should tell us that we're going to continue now. Continue into 10:30. I'll screenshot this, put it in predictions. So 10:30 is still the short-term DOT. So, when we're looking at the trade, what's actually wrong with this trade, Flux, that's making you kind of not worried about a stop out, but it's likely to get stopped out? Or just seeing it. Obviously, this gap we said in the beginning preferably would be used as a breakaway gap. It's less inefficient than something like this. So the fact that it's to come all the way back down, tag out the order block there, and kind of stay within this range for this long, to me, it's likely not to get that nice energetic expansion. It may come back and stop me out and then run for that. But it's not this kind of reaction you see where it quickly is touching into this, leaving it. If you've seen any sort of order block, not order block, but mitigation plus fair value gap trade, where it just quickly leaves. Trying to see if I can find one. There's not really any in here, is there? All this price action is kind of meh. I mean, even this isn't too bad, right in here. You see the candle buys are still staying within that, and then it leaves. Then you have a breakaway gap. Oh, we got stopped out. Screenshot this, put it in the stream trades. So now you look for these to be ran out. The trades for me today, macro wasn't what I wanted. Get ready. Gotta get it ready for work. I love it. W discipline. Still a win in my book. Monday, no trade. Tuesday, no trade. And here, just probably a later entry, but waiting for what I wanted. Got what I wanted. I'll take it. So we'll continue to watch it into 10:30 here, just to see what it wants to do. But I'm looking for that soup low right now to be ran out. If it does give me a better reentry, I'll go in with half size. But I'm right now I'm waiting for that low to be taken, and then that same kind of signature with the lower time frame SysD. Let's shift this down. What was that? We got in with what? 3, and then 2, I think. 3, 2. Okay, so we'll go back to 2. What? Oh. So we're waiting for now this swing low to be taken. Stop run. So took out the low into an inefficiency. This to me, what does this look like? First stage of reaccumulation. But although we kind of already had that in here, unless you want to look at this as a low risk buy, but I think this will be low risk buy. So 5-minute gap, 5-minute stop run. This will be my last attempt if it gives me something I want. But looking for the same kind of reaction. 15-second market maker buy model. All right, let's go to Friday's price action really quickly, or Thursday's price action really quickly. Oh, actually, Tiebags is not even in here. All right, well, I'll record the video later then. But Thursday's price action a really good example of that that delivery I was talking about with the inefficiencies. Notice how your 1 minute order block is all the way down here. If you want to use the wick. So I am watching that. But this would be your low hanging fruit up here. It should continue to drop. It doesn't look like it wants to get a reaction off this, so I want it to spike back down. If it can touch the order block, that'd be best. Touch the order block, even fill some of this, the upper portion of it. And then give me that market maker buy model on the 15-second. You can see, even on a 15-second chart, that same exact signature you see fractally on the week. Swing high, failed. So all that low resistance is building, even on a 15-second chart above or below, I guess, this short-term high. You can actually see this as your original consolidation. And you may be, oh, how do you trade the 15-second chart? It's the same exact kind of concept where if the 15-second chart is the one that you're tape reading, you can almost use the 1 minute or the 5 minute as your higher time frame PD rate. Just higher time frame, you're going up a couple steps. So you got to wait for a 1 minute or a 5 minute PD rate to be tagged. And then I'll go to the 15-second to see, okay, is that market maker buy model printing? We do the same thing with a 15-minute and the 1 hour. We wait for a 15-minute or 1 hour PD rate to be tagged, wait for a 1 minute market maker buy model and take that. So we're just kind of going down the ladder. We're going a little bit further down. We're now, okay, if we know where the week, the day, the session are likely to go to, and we can drop further to, okay, where there's a 5 minute or a 1 minute PD rate being reacted off of, but we still want to get a good entry, we then have to almost drop another time frame, 15-second. Or I that's what I do. And I'll look for a very refined kind of entry. See, ES is still also generating that low resistance up here. Yep. Oh, on the top. I see. You already know, Slater. I took my loss for today. Trying to see if it'll give me another one, but sitting with my hands in my pockets. Finally, a trade. But since last Thursday, I think it was the last time I took a trade. Just makes the journal more interesting, you know? Journaling when you don't take a trade is like, today I was good at being patient. Keep being patient. There's not a lot of stuff. It makes the job is so much more boring when you don't take any trades. Nope. Okay. It's pretty good though. 10:26, man. Let's start the spooling. Come on now. Nothing. All right, let's go for this low again. Thank you. There you go. All right, order block touched with the gap. And this right here, look how it's energetically running down. I love that. Energetically running down. If you can get an energetic run up, there's that last kind of displacement you see normally at the bottom of the market making models, right? It looks like this. And this last run is normally really energetic down to the bottom. I'm not saying that this is going to be the bottom, but okay, now it's shooting past that order block. So let's go back to the 1 minute, zoom back out, see what's going on. 5 minute chart, also 5 minute gap here. Trying to see, do I want to wait, take another re-entry, or do I just close it out for the day? And this is a great trade to me. Number one, obviously being patient throughout. Number two, pretty much on par with my setup that I like to take. Number three, and probably the most important thing, it's a very, very good opportunity to learn from, because it looks like it's such a simple mistake, right? And I still make these mistakes here, right? It almost looks like I'm buying at the top, and I basically did, right? So to me, I love this, because then I can look at this and look at, okay, what did I do wrong? Was it something I did wrong with my profiling? Was it something I did wrong with my timing? Was it something wrong with my expectations? You know, in terms of high probability versus low probability for the day. It's a bunch of different things. So we'll definitely have a mark review today, and we'll go through that lower time frame price action with the gaps and such. But this kind of trade to me is, I love this sort of stuff, because it's tuition for a better model. And especially when it looks so, you know, if you were to send this to, if you were to copy this, send it into wins and losses, and I didn't have my name attached to it, you're probably gonna have some people make fun of you. Even if I were to send this, you know, you're probably even making fun of me right now, or in the wins and losses if I were to post it. And it's all good. You know, it looks like, if this was anyone's regular trade, this looks like, oh, it's such a bad trade because you're buying at the top. How did you not see it was going to go down, right? And these are, it looks like a simple mistake, but to me, everything else was lining up, and I just read it wrong. That's all it is at the end of the day, and it's just a loss. And you know, this doesn't worry me about my confidence about, oh, can I trade or not? And it shouldn't worry you either, right? It's when you have low confidence already that a loss like this will make you freak out. And the fact that we're taking out this lower here, I really want nothing to do with this. So that'll be it for this one. Tiny loss in terms of what we took on Thursday. So not too bad. We're still above 52K. Should I reset it, or should we put it to 100K? I don't know. If I can get it to 100% in 2 months, that'd be not bad. Or I'll just reset it for the fun of things. And here you go. So it's looking like an ERL to IRL sort of day. So that'll be it for me today. Nothing after. Stream trades, did I put it in? I did. Okay, perfect. So keeping the losses small, the wins large, and keeping my sanity and mental capital in check for tomorrow's price action and Friday's price action, where I can easily squeeze this out if it gives me those setups. And if Thursday, Friday I lose again, it is what it is. So job here is 90% finished. The other 10% of my job, and probably the most important part, is to go back in and journal, which I will be doing. And then I'll be getting away from the charts. And later today, we will have a market review for whatever I missed on today's price action. So I appreciate you guys sticking around. Stuff like this happens, and this is why I don't suggest you copy trading anything I'm doing. Do not copy trade me. This is demo. Okay. But yeah, take care the rest of the day. We'll end a little bit early, and hopefully you're able to learn something from today's price action, even the tape reading of kind of what I'm looking for, even if it doesn't play out exactly to the way that I'm looking. All right. This is part of the job. So enjoy the rest of your day, and I will talk to you guys very, very soon. Peace.